Hello, everyone. I believe that the market is at an extremely important tipping point here. The indexes all look like they are dead on arrival, about ready to roll over and sell off. Unfortunately, today, man, it's so disappointing because I have near signals, and I will definitely probably regret not taking any kind of signals this evening, but I got to be honest, there's no real signals out there for me to take on any. The DIA is the closest with its heavy volume sell off, and I could initiate a short position there, 5% account capital into it, and I still think I might do that. But what's more shocking is that none of my inverse ETFs look that bullish. Like SDAO, I like, but that's so far off the high of the day, and it still looks early in the pattern, and there's no pocket pivot point signal on it. SQQ still below the 50-day moving average. It's not really the most bullish close. SRTY I got a pocket pivot point signal, but look at how far off it closed off its high a day. So there's really nothing for me to do in safer retirement accounts, but the DIA looks good to be a short position for 5% in my margin account. So in hindsight now, I only decided it as I made this, not made the video, but a little bit before making this video, that I do want to go ahead and take the DIA short. But unfortunately, there's, I don't know. I just can't take that. It's not even pocket pivot point signaling, so I just can't take it. But the DIA looks bad. But that just goes to the fact that this overall market looks like it's about to ready to roll over. The Dow Jones Industrial Average looks better than the Diamond, but it also had a clear distribution day today, and with the death cross already underway and the weak price action underneath it, I don't see how that's going to turn out well. The Dow Jones Transportation Average holding in there, so that is a silver lining in this dark clouded sky that we're starting to get in the market. The S&P 500 looks like it's just walking on a cliff's edge. The 50 and 200-day moving average are going to try to kiss each other. If this index breaks down and then the S&P 500 death crosses, that's just going to start to be way too much bearish signs lining up. Like I said, we're still long a lot of our longer term positions that are doing well, but notice all of our recent long positions, we're starting to get a couple that are failing. We're having to cut losses. Our losses that we're cutting are extremely small on small capital, so no harm, no foul. But sadly, we're not going to be getting to 10 to 25% of my account capital in any one position until we at least see a 10, 20, 15, 20% correction in this market. But we're starting to get some more losses. They're tiny, and at the same time, though, also we have a dearth of long signals, so we just really don't have the makings of something of a market that tells me that, oh yeah, we're going to probably rally here. So with S&P 500 rolling over, that's then confirming the Russell 2000, which is already below its 200-day moving average, having a very difficult time retaking it. It also might want to undergo a death cross. The NASDAQ, kind of tight roping, another clear distribution day. Those distribution days are starting to pile up. And the biggest thing is that, guys, seasonality is important until it's not. So if August and September are supposed to be down, but the market's going up, cool. The market's going up. Like, that's good. Go with the trend. But when the market's going down, confirming seasonality, it's not the time to be a hero. Not the time to be saying, I'm going to buy this dip. Every other dip's work. This dip's going to work. Seasonality is one of the most important things in the market besides cutting your losses quickly all the time and never fighting the Fed. Outside of those two things, number three is seasonality. So whenever seasonality, the price action is confirming seasonality, and we have our indexes looking the way they are, and we don't have the long signals showing up. Our new long signals aren't not only not working, but some are starting to cut losses. I think the writing's on the wall. And when we look at that, PFPT is a final 100% sell signal on a day basis, closing below my final sell stop level here. I've already been knocked out of all of it. XES knocked me out today whenever it moved below these lows right here, but it looks like oil's going even lower. I tell you what, man, that looked like a very excellent bottoming attempt for oil. I know that it wasn't symmetrical off the lows. Like this move here in April was more symmetrical overall, and it failed. And so, but this move seemed a little bit more powerful, had more confirmation, like with utilities and gold stocks. But I guess oil is in a different league of its own, as it's now breaking to new lows overall on heavier volume. So pretty ugly situation overall for across the board, no matter where you're at in the oil and gas industry. So that was a final cut loss. And then also CHRS closing below these recent lows right here. Those are my final sell stop areas. So I actually think that we're leaving with tiny gains on that one. think the long position was back here. So small gains on that one on CHRS. But also there's 50% sells in SPSC. I'm already out of all of it, so it doesn't matter, but it's closing below the 50-day moving average before producing any meaningful gains. LAD is closing below the 50-day moving average officially. I'm already knocked out of all of it back here in July whenever it cut those lows right there, so it doesn't matter to me. But this is a 50% sell with lower volume. Confirmation close below 50-day moving average will be 100% sell on that one. Same with SPSC. And then new long DERM is actually closing below the 20-day moving average before closing below the low of the day, so it's only a 50% sell. However, what I'm personally doing is my final sell stop was all the way back here, and I had half my sell stops at that low a day, 23.77. My final sell stop now is going to be 23.93. So if DERM goes below 23.93 tomorrow, I will be completely out of it 100%. The failure of the 20-day moving average and above average volume is no good, but still, you know, it's holding in the base overall, so don't want to get carried away just in case the market does rebound. And then also FR is looking kind of shaky as a new long too. I'm moving half my sell stops to below 2086, and then I'm going to keep the final half right back here. But once again, another new long that's not looking too well. And like I said, we have no new long. I don't think I said that actually. We have no new long positions. The stocks I did flag was World Wrestling Entertainment, and you know what? It's still entertaining. It isn't Roddy Piper, rest in peace, entertaining, but it's still pretty amazing actually whenever I do end up watching it for a little bit for entertainment purposes. They're good actors. Funny actors, I should say. And then FFG, another insurance stock, pocket pivot point signal. That's not the kind of consolidation pattern I like to buy. Kind of a wedgy handle breakout, not my cup of tea. And then TLT looks like it's moving good. And like I said, a lot of the, you know, inverse ETFs, man, they came close, but gosh, none of them, man. I don't. DXD, I could do that one. Why don't I do that? So, you know, yeah, let's do that. That one's ultra anyway. So DIA, 5% in the margin account. And then why not? DXD, let's go 5% in the cash accounts, IRA accounts. Because, I don't know, man, this market just looks sick. So why not? DXD is going to be a new long. What do you know? So before making the video, I decided to make DIA a short. And then I'll go ahead and make DXD a long. 5% IRA, 5% margin, DIA, and that's exactly how I want to play it because this market does not look healthy. Our new long did work BLDR, but that's more of a byproduct of how bullish this technical pattern is overall. And home builders, look at that technical pattern. What rough markets? And that's just so confusing. So that's why even if this market does sell off, are these guys just going to keep bucking the trend? And my God, there'd be some odd divergence I don't think I've ever quite seen before, but I could be wrong. Memories are very short-sighted and don't quite clearly remember past events the way that they really were, so it is what it is. But BLDR, another beautiful, you know, a beautiful pattern overall, and just like our HDP, which I've already been knocked out of, but you know, it's still working on a nice pattern. BLDR, though, if it can consolidate on lower volume again to kiss that 50-day moving average and produce another pocket pivot point signal, it would definitely be an add signal even if the market is selling off.